How's it going, fellow traders? How's everybody doing today? Glad you can make it and join me this afternoon on a beautiful sunny, at least where I am, afternoon on a Thursday, May 5th. We're in a new month now, and we can see that things are getting pretty interesting in the markets as of late. And we've been talking about what we should be expecting from the markets for quite some time now. We were able to spot the weakness pretty early on, just tracking the supply and demand created by the institutions. And again, you know, when we follow what the big banks are doing, it becomes pretty evident to us what is coming our way. So we're going to look at some markets. We're going to look at the SPY, Nasdaq, the Dow Jones, and the Russel 2000. They're all pretty much in line with each other. And we'll go through that and show you just what's been taking place. So as you can see, we got a chart of the S&P500. And I'll enlarge this weekly chart that we can see here. Okay. And if you take a look at what's been going on here, you look at what price was doing all throughout here. Okay. In fact, let me change the color. Okay. You see what price was doing all throughout here. Okay. Price was uptrending, and that stopped at the end of 2021. Okay. Price was uptrending until 2021, and then what has happened ever since is they put it into neutral territory. So they broke the upward trend, they put price into neutral territory. Now, when price is in neutral territory, it could just sit in neutral territory for a while. But you have to ask yourself, why are the big institutions putting a market that was trending to the upside in neutral territory? What would be the purpose of that? Well, there's a couple reasons why they would do that. It's either to take profits on those positions that they held as they pushed price to the upside, or they're going to pause to reaccumulate some more positions on a grander scale before pushing price even higher. So when you consider the two options, what we've been able to determine is that they are taking profits on those positions that they accumulated on the way up. All right. So far, we have not been seeing any evidence to support that they're going to accumulate a stronger position from this area here. All right. So this leads us to watch for signs of a downward structure to be created. And we are just on the brink of that happening. Just on the brink. All the evidence that we've been seeing on the charts is supporting the fact that they are likely going to create this downward structure and start pushing price lower. All right. So this is what's happening with the SPY. You can clearly see that. Okay. You can clearly see that we went from upward trending and then now into neutral territory, but we have not yet seen any very strong and more sustainable structure to the downside. It's getting there, but it's not quite there yet. So this is the weekly chart, and the weekly chart is going to be incredibly important to keep an eye on, because this is the chart that I believe once they create that structure to the downside, this is going to help facilitate a move, a much larger move to the downside. Okay, so this is a chart that we'll be continuing to monitor. So that's the weekly chart, and now I'm going to take you to the daily chart, because this plays a pivotal role in what is going to be taking place on the weekly chart. One thing that you'll learn about studying the supply and demand dynamics of the chart is that what takes place on a lower time frame chart always helps to facilitate what happens on a higher time frame chart. Okay? So if the banks want to create a long-term sustained structure in price to help facilitate a move to the downside, they have to create that. They're creating it on the chart. Now, most people don't see this, okay? But the banks are doing this. Now, they do it in such a tricky way that they try to form candlestick patterns that you would typically find in your average trading book, how to learn to trade the markets. And they're going to try to create these candle patterns on the charts that will trigger traders to take the opposing side of the trades that they want to take, okay? Now, this is something that we've been talking about for quite some time, but it's pretty shocking when you first come to this realization that there is a coordinated effort by the large institutions to create candlestick patterns on the charts to help lure traders or to lure traders into taking the opposing side of their trades. So that's what we've been seeing on the charts. And so if we take a look at this daily chart, what I will point out to you is we have an institutional area of selling here that was created just recently. Okay? The institutions were selling the market at this level here. And so yesterday in our Telegram channel, I had members reaching out and saying, hey, price is heading up. What's going on here? I thought all the evidence was to support that the markets were going to drop. And so one thing as a trader that you must be is patient. Okay? You must have really good analysis. You must really understand what's happening in the markets. But once your analysis has concluded that a certain move is going to take place because all the evidence is suggesting that, then you just have to be patient. So we had price rally up, but it rallied straight into this area where the institutions were selling. And so far what we've been seeing on the charts is that the institutions have been taking much more interest in selling the market than they have been in buying. And so when we locate their areas of selling, it's just a matter of watching for these areas to be engaged, which just happened yesterday and today. And once you see price rally into these areas, you see the supply becoming engaged, and you see this big drop in the markets today. Now, you can scan through the news and you can scan through the headlines, and they will give you 100 different reasons as to why the markets are dropping. Okay. Now, obviously, I'm being a little bit sarcastic here, but you understand the point I'm trying to make is that you'll find many different explanations as to why the markets are dropping. But the one true explanation is that the institutions were selling at this level between the 4,200 and 4,300 area. And that is why when price rallies up into these areas, you see a continuation of the selling. Okay? So this was very much predicted, this drop here. Okay? And the next thing we're going to be watching for is these lows down here, because you have to understand that the institutions created this selling area, which pushed price down to here. Now, the question is, they pushed price down to that area for what purpose? Did they push price down to that area where they, finished adding in their massive amount of short positions, and they just wanted to rally price up back to the area where they were interested in selling again? Well, in this case, we're seeing that is exactly the case. But now it's about getting price to surpass that previous low. Because if price is unable to surpass that previous low, then price is going to be changing its dynamic. Changing the dynamic that would otherwise suggest that price is going to go lower. All right? If this low gets taken out, then we know for a fact that they want to engage in a move to the downside that would help to facilitate a more sustainable downward structure on the weekly chart. Okay? The weekly chart that we just took a look at. All right? If you hadn't had a chance, please hit the like button if you do like the content that we're providing with you today. Now, what I'm talking about, what we're breaking down right here, is something that we go into much deeper in our level 2 sessions that we do. We have level 1, level 2, level 3 classroom sessions that we offer to our students, and a handful of students just graduated from level 1 into level 2. And structures of the market is what we deal with in level 2 classes. So We talk about trends. We talk about the breaking of trends, price entering into ranging and consolidation, and the meaning behind it. Okay? The meaning behind it all, because it's very key to understand why price is doing what it's doing. When you understand why price is doing what it's doing, it will really help you to understand why the markets move the way they do, how they lure retail traders into taking the opposing side of the trades, and where to expect the markets to move to. Okay? So, most traders are losing money right now, or investors, I should say. Most investors are losing money right now because most investors have been trained to buy the market and hold it, buy stocks and hold for longer periods of time. But the problem with that is that, everything is all hunky-dory, when you have moves like this. But the markets don't move like that forever. And there's a reason for that. Is because they want to shake people out of the positions that they accumulated on the way up. Because it's very easy to hold a position when it's in profit and it's moving up. But most investors don't have the patience and don't have the mental fortitude to sit through massive drops in price. And so what will happen is once the market dynamic starts to shift and investors start looking at their trading accounts and they see that their positions are not increasing as quickly as it was once, they start getting worried. And they start thinking, oh, it was a nice profit that I had. Do I want to lose more of this profit? Like, what's going on with this market? So they tune into CNBC and Bloomberg and Wall Street Journal. And unfortunately, what they're going to see are very scary headlines. Headlines that are going to put a lot of fear, instill a lot of fear into people's minds. And with that, there's only so much of a drop somebody's going to be able to take until they start thinking, you know what? I don't want to lose anymore. Maybe I should cash out and move my money into other assets. And eventually they'll do that. A big handful of them. And by the time they do it, they'll take a significant loss on their positions. And it's usually not long after that we'll start to see a reversal in this market, because a massive, massive, massive reversal is going to take place in this market. Okay? I can assure you of that. When we look at the supply and demand dynamics of the chart, we can see where the institutions are buying, where are those areas that the banks will have interest to re-engage into these markets. We can see that. So after a drop in price, there's going to be a time where we're going to see very strong evidence building up of the institutions reaccumulating their positions. And guess whose positions they're going to be reaccumulating? Yeah, it's the shares that were owned by the investors as they purchased them on the way up. Okay? So you get people excited, you get them to use their money to buy shares of something, rallies up. And then eventually when they sell them off to the big bankers who will buy it at bargain prices, only to shift price back up and ride the waves. And only when price is too high will investors say, oh, okay, I guess price is heading back up again. Let me re-engage. And this is how the game is played. So unfortunately, you'll have retail traders getting out for losses here and then getting in to new positions up here. Okay? And then the whole cycle starts all over again. Because what do you think they were doing here and here and here and here? Buying. Yeah, but what happens when you wait for a drop like this to take place before you sell because the pain is too hard? The pain becomes unbearable. You can't sleep at night. You wake up in the morning, the first thing you do is you look at the news, you look at your account. This is what happens. Use other people's money to accumulate the shares at higher prices from the institutions. And then scare everybody out of their positions, wait for it to drop, reaccumulate your positions, and now you got a bigger stake in the companies that you already own. Okay, and there's a lot of large banks who own these companies that are in the S&P and the Nasdaq and so forth. And this is the routine that continuously takes place. So you want to be a seller of the markets at the high prices, right? This is where you want to be selling. You want to be a seller at these areas, but only if you can spot that the market is going to drop. If you can't spot that, then you're not going to be participating in that drop. You're going to be participating in the drop if you know what you're doing, while other investors are losing money. That's the unfortunate truth. So you want to be selling up here, and you want to be buying when you see the institutions buying. Okay? When those investors are freaking out and getting out of their positions, this is where we want to be buying. So then we can rally, have price rally, and make profits on those positions. So mark my words. Okay, all the evidence is suggesting that this is going to take place. And we detailed this in our level 3 sessions and some of our market update sessions for members. Even if you're a basic member with our school, you'll have access to all of our market update sessions. And just to give you an idea of what that looks like, I'll bring that up for you here. This is our watch list videos. Okay, where we have them all listed here. The latest one that we did was yesterday, today's plan, US dollar rate, and more. And in this session, we talked for about 20 minutes. We went through the markets, we went through the dollar. We accurately forecasted the drop in the dollar, which we did a breaking news alert on our YouTube page. If you haven't subscribed to our YouTube page, please do, so you can get future alerts. These are things you need to know, okay? Because it's very possible to trade successfully in the markets, but you just have to be aware of what's likely going to take place. So in this video here, we broke down a lot of the different currencies that we're looking at, the drop in the dollar, which we forecasted. We took a look at gold, oil, the longer term forecasts for those. We also looked at the market, what phase the market's in, what we're preparing for, what stocks we're riding, what trades we have, how those trades are progressing, how we're going to manage those trades. All that stuff is within here. So basic membership, $49, gets you access to these, as well as the observation journals that we keep track of all the institutional supply and demand for all the assets that we trade. So extremely valuable, and good time to get involved with our school, because soon we're going to be increasing our prices, basic packages, and the subscription rates for becoming a student. They're all going to be going up this summer. So we're in May now, June just around the corner. We're likely going to be increasing them sometime in June. Okay, sometime beginning or mid-June is the plan. So get involved now while the rates are cheap. You'll be grandfathered in. So if you sign up for basic membership, as long as you don't cancel your membership, you'll be grandfathered in at $49, which is an absolute steal. All right. So that's what we got going on with the SPY. All right. So next we have the Nasdaq, and most of you who've been following us and following our YouTube channel have known that there's been several times in the last couple weeks where the Nasdaq and the price action on the Nasdaq played a significant role in being able to determine what was going to take place with the overall markets. Okay, there were institutional buying areas that were in play on the other markets when the Nasdaq was clearly indicating to us that price was going to be dropping lower. And here's one of those key areas here in price that gave us an indication that things were going to be shifting. And I believe also from memory, this area here was also an indication that the markets were going to be heading lower. So all the markets are correlated with each other. Sometimes we'll see strong evidence on one chart over another chart. But what will tend to happen is one chart will lead another one. Just like in the currency markets, we had a situation where the dollar was breaking through some key areas that we were watching and making a significant move to the upside. And the euro had not yet made that move. And so I told members, I said, you see how the dollar made that move? Well, guess what's coming? The euro is going to follow suit, and the euro is going to drop. And we did a breaking news alert on our YouTube channel with respect to that. And then in the following days, we had a massive decline in the euro. All right, so this is a chart that we always follow. And again, you can see institutional supply coming into play here, and the drop is being formed, just like with the S&P. Same thing. Both markets correlated, both markets re-engaging with institutional supply and then causing a drop in price. All right. So I'm sure your next question, if you had any questions, is where is price going to drop? Where is price going to drop? That's the key question, right? And so if we look at this daily chart, let me just scrunch the price action like this. There we go, to fit all in one. Here's the situation with price, okay? We had this here. You know, that was back in early 2020. And if you guys remember what took place there, we had a big drop in the markets, okay, at the beginning of 2020 when a lot of places were entering into lockdown. And what happened there, a lot of people freaked out and got rid of their shares, only for the institutions to come in and buy. Okay? So again, similar situation as to what we were explaining. Right down here, the institutions were buying while everybody was freaking out and selling. And so ever since then, they've been pushing price up here. And now we're starting to see a decline in price. All right. Slowly retrace up to engage in supply. Slowly retrace up to engage in supply. Now, what we are seeing is that there's very strong evidence suggesting that we're going to see a much larger decline in price. And so we're going to be monitoring the charts, obviously, and we're going to be watching to ensure that this short-term and medium-term momentum to the downside ends up becoming longer-term momentum, because all the evidence, as I've been saying, is suggesting that longer-term we're going to see a big decline in the markets. All right? But as we watch the markets day in and day out and week in and week out, what we're watching for is for the evidence to continue to be solid. And we're looking for more evidence to support the idea that markets are going to drop. So just as at the beginning of this session, we were looking at the S&P, we were looking at the weekly chart, and I had mentioned that the structure to the downside wasn't a very sustainable structure the way that it was looking as of today. But if they eventually create a more sustained structure to the downside, which is what we're going to be watching for, then there's nothing to say that a drop like this can take place. Okay? Once that sustained structure is in place, nothing will stop the market from dropping, okay, significantly. Because what we know to be true about the markets is that when such structures are created, they tend to provide more significant longer-term drops in price. And so after this very strong rally during the last 2 years, I think a lot of investors have gotten excited. I mean, I know through my personal experiences, I've met people over the last couple of years, over the last year, I should say, that have noticed this significant increase in the markets. And a lot of them are looking for work, and a lot of them, are looking for extra income. And they've heard that I'm involved in the markets, and they all come to me with the same thing. Excitement about the big strength in the market these days, and how it just seems to be very easy to buy anything because it's going to just continue going up. And so, this is part of the problem, is because when people get excited about a market, doing something specific, it's probably too late for them. And so I think that we're likely, if the structure becomes more sustainable to the downside, we're likely going to get a big drop in price to levels before COVID took place. And it'll be very likely that it's going to be from those areas that we're going to see a very strong rally in price form, something that will just surpass the highs that we just got to in the late 2021. So this is something that we're going to be watching for, and we'll be getting into positions to participate in this drop. I've already exposed myself to the downside in the markets, and the portfolio is looking good with that respect. And we're going to look to continue to add to our portfolio. So how it works on our end is that depending on the amount of support to suggest that a continued move to the downside is built, okay? The more support, the more sustained structures to the downside, the more exposure to the downside, all right? And when we see that price is hitting a bottom and we start to see structures entering into neutral territory, that's when we lighten up our positions and we start taking profits. And once we see evidence to support that the institutions are going to start to reaccumulate in the market and start pushing up, that is when we will start closing our short positions in full and then re-engaging in the market to the upside. Okay, so well thought out, well structured system of following what the banks do, getting in short when they get in short, getting in long when they get in long. All right, so that's the Nasdaq. If you have any questions, let me know, and I'll be happy to answer them as best as I can without revealing too much of what it is that we do. Paul writes, Etsy can easily drop. Yeah, we've got short exposure on Etsy. It's one of those that we traded before earnings, knowing that the institutions were likely going to be pushing it lower. And we had some amazing calls. Netflix, whew, that was a great one, wasn't it? Netflix was an amazing call. We did extremely well with those put options. Dow Jones. Okay, so Dow Jones, same thing. We got institutional supply that's in play, and hence the weakness in the charts. And the Russell, Russell's one of those charts where you look at what's happening here on the monthly chart, and there's just nothing to stop price from dropping down to this area. So we've got exposure to the downside on the Russell as well. Okay, so Russell, the Dow Jones, Nasdaq, they're all pointing in the direction to the downside. All right. Let's see. Any questions? Let me know. Hit the like button if you get a chance. And again, if you're a new member or a new follow of our YouTube channel, hit the subscribe button so you can get alerts, and hit the notification bell as well so you can get some notifications next time we do a live session. All right. So if you have no questions, I will leave it at that and just give you something to think about. I'll be busy with the school. I'm going to be setting up some new classes, and I'll be sending out links probably within the rest of the week. Okay? Just been extremely busy reviewing student homework and back and forth with emails with students. But I'll get those links out to you guys shortly. Okay? So be well, be good, be prepared. Just keep in mind what I said. Very important to to understand this dynamic that's in play and the overall theme in the markets. All right, that's it. Enjoy yourself, and we'll talk to you next time. Take care, everybody.